Firstly, Happy New Year from all of us in Reyker. My name is James. I help the product development team in Reyker. I wish everyone who's watching a very good 2014, and like every investors, we should make a lot of money in 2014, hopefully. With me today is Laura, who works in our client servicing team.
So James, thanks for coming to talk to me today. We're going to sort of talk about 2014 and what we might expect from the year.
Okay.
So in terms of product and product changes, I mean, what kind of things can we expect from 2014, and particularly in relation to pricing, product innovation?
Yeah, I think the biggest challenge in 2014, as I discussed in the review in 2013, is where is interest rate going? There's still a lot of cases about, especially the Fed in the US and possibly Eurozone, ECB as well, and possibly Bank of England as well. They will have to keep rates quite low. But also, especially in UK as well, you can see there's a lot of discussion about whether the low rates have been fueling a housing bubble. So in 2014, there's a chance that short-term interest rate may rise in the UK. And then if that happens, and that will actually also drive long-dated interest rate up, that will help pricing a bit. The other factor, obviously, is a lot of the advisors and investors love kick-out plans. Can see the reason. Kick-out plans, the returns have been worsening through 2013, as discussed before. That's because of volatility has been dropping as well. Again, I think that is the big uncertainty whether the rate change in the UK possibly will actually trigger a higher volatility and improve terms. But having said all that, I think if this rates and volatility environment continues in 2014, I think the biggest innovation we see will be on ways to improve the terms of kick-out in this low rate environment. The other innovation I wanted to quickly touch on is there has been a lot of people doing structured products backed by multiple counterparty banks. That's have been popular in 2013. I think from an industry perspective, I won't be surprised that there are more people coming in and doing something similar. And I won't be surprised that actually at some stage people may even use non-financials to back structured products. Whether it's going to be 2014 or maybe 2015 can be debated, but it may happen in 2014.
Okay, so some exciting things ahead.
Hopefully.
So you touched a little bit on yields. So what kind of yields do you think that we can expect from Reyker Structured Products in 2014?
That's a very hard question, Laura. I mean, I can't even answer basically where Bank of England interest rate will be, base rate will be by the end of 2014. But if long-dated interest rate continue to rise, I would expect the rates going to improve a bit. At the moment, base rate is still 0.5%, and a structured product that pays 6% return have a spread of 5.5% above base rate. So even 6 looks low, sounds low, but it is actually quite a bit above base rate or what you get from deposit account. So if Bank of England start to raise rates, then I expect that to rise as well. So again, I'm not trying to give all the throw all the question back to Mark Carney, but unfortunately, he actually will probably dictate a lot about what yield is going to be in 2014.
Okay, so I'm looking a little bit towards investment strategies. We think about corporate bonds, equities, structured products. I mean, which would you invest in and why?
Well, I'm a textbook believer of basically diversification. So oddly, I try everything. I'll be cautious about corporate bond because of potential rise in interest rate, and it has been asset class has a good run for a few years already. That's one. I think the QE that has been undertaken by the central banks over the last few years, they inflated their own balance sheet and also inflated a lot of companies and also individuals' balance sheet with easy monetary policy. There's a chance that actually they have sold the seed of inflation. So inflation may be picking up in 2014. Again, as a believer in textbook, theory on investments, I think equities will be a good investment against inflation. However, given everything is driven by central banks and what they think and what they say after the central bank meetings, I think expect a bumpy ride. When things are bumpy, it's probably not a bad idea to put in some risk control using structured product as well.
Sure. Okay, so finally, James, can you tell us a little bit about your sort of vision for Reyker Structured Products in 2014?
I know you're going to ask that. So, structured product is one of the investment products that Reyker want to specialize us in. Now, what we have done in 2013 is spend a lot of time to strengthen our product development process, especially in producing quality marketing literature like this brochure in front of us. And we spend a lot of time to make sure we understand suitability and understand how we present to target audience with IFAs. Now, next step for us is to put investment thinking back into structured products. At the end of the day, structured products are investments. So if without investment thinking, these products may not work properly because we get the market view wrong, or basically we miss a good opportunity. So one of the things we're probably going to do in 2014 is to integrate our product development process and also our product range more in line with our investment outlook. We are in the process of setting up an investment committee here in Reyker that drive all the input for investment products that we're going to look after, and this probably will be one change, putting back investment thinking in the core of structured products. That's our mission for 2014.
Okay, so some exciting times for Reyker ahead.
Yep. So, okay, thank you, and we will probably be talking more products as usual in due course, but if you got any questions, please contact us. Our website is www.reyker.com, and you can email us as rfp@reyker.com as well. So until next time, thank you.